Is GameStop back or on a temporary high? GameStop, a gaming merchandise retailer, reported earnings of nearly $50 million in net income, sending its stock soaring. Market analysts mocked GameStop for its surging stock price, calling its investors foolish gamblers. However, the company has implemented a number of significant reforms over the past year to recapture its former glory. So, is GameStop's impressive fourth quarter turnaround a vindication against all of its critics, or is it simply a temporary high before it eventually declines to zero? Hi, allow me to welcome you to another video of Finance Sense. We cover all the latest trends in the financial markets and the economy. Make sure to leave a like, subscribe if you're new to our channel, and turn on the notification bell to keep posted. With that being said, let's start. After the market closed on March 21st, GameStop's stock price soared with the release of the company's fourth quarter 2022 earnings report. The firm claimed a startling return to profitability in the quarter, with a net income of $50 million. As a result, the stock increased by as much as 40% in after-hours trading. The following day, the GME stock rose by 50% from its previous close. This occurs 2 years after the infamous 2021 short squeeze of meme stocks and the ensuing wave of negative media publicity of meme stocks. Market analysts have mocked GameStop for its soaring stock price, calling its stockholders foolish gamblers. However, the business has undertaken several significant changes during the past year to return to its former glory. The firm was restructured by billionaire activist investor Ryan Cohen, who brought in former Amazon executives and other highly qualified professionals. The company underwent several changes, including cost reductions and a shift toward e-commerce. They even plunged headfirst into blockchain-powered NFTs, which many consider the future frontier of online gaming. But there are now serious doubts about GameStop's future sustainability due to the tragic failure of their partnership with FTX and the lack of a viable answer to the inevitable fall of brick-and-mortar game retail. Nearly all of GameStop's spectacular return to profitability in the fourth quarter came from cost reductions. In 2020, GameStop launched an all-out effort to cut the company's expenses. The business shut down 243 of its worst-performing stores permanently in 2021 alone. Additionally, it has aggressively laid off employees from both its Texas head office and its retail outlets. Together, these cost-cutting initiatives were sufficient to totally reverse the fourth quarter net loss of $150 million from the prior year, leaving a $50 million profit excess. As a result, GameStop was able to cut costs to the point that it went from having a $150 million deficit to making a $50 million profit, even though the company had no growth and a 1% decrease in total sales from the previous year. This improvement didn't happen immediately. They resulted from more than a year of change at the top of the organization, beginning with Chairman Ryan Cohen. GameStop reorganized its entire executive team in April 2021, removing the CEO and CFO and electing Ryan Cohen as board chairman. GameStop also hired a new Chief Operating Officer, Chief Technology Officer, and Chief Growth Officer. Moreover, the new CEO and CFO were both former Amazon executives. Cohen assembled the remaining team members by selecting the highest-ranking executives at his firm, Chewy, including the new vice presidents of brand marketing and merchandising. Additionally, the new GameStop management started by making significant adjustments to how the business was run. Instead of receiving cash payments, the board of directors began receiving GameStop stock as their only method of payment. As a result, their interests aligned with those of the shareholders, creating a compelling incentive for them to return the business to profitability and growth. Their initial course of action was to take advantage of the high GME share price to quickly sell millions of dollars worth of stock. The firm then utilized the money from the sale of its stock to pay off virtually all of its debt. As a result, GameStop was able to cut its overall debt by a factor of 10 from around $400 million to only about $40 million between the beginning of 2021 and the beginning of 2022. Today, their only long-term debt is a loan from the French government for COVID relief, which has very good financial terms, including low interest. GameStop has significantly benefited from this because interest payments were eating up a sizable chunk of the company's revenue before. Prior to this, they spent roughly $25 million on interest expenses in the first quarter of 2021. The company's interest costs were less than $1 million in the first quarter of 2022, and they turned a little profit on their cash reserves in the most recent reported quarter thanks to rising interest rates. Therefore, GameStop's new management permanently increased the company's annual profitability by tens of millions of dollars with the aid of retail traders who pumped up the stock before implementing any changes to the company's operations. In order to focus more on transitioning to e-commerce, GameStop also started eliminating its failing brick-and-mortar physical stores. The firm shut down a total of 243 locations globally. These store closures freed up millions of dollars annually in rent and salary costs. Simultaneously, in the year 2022, they unveiled a number of different initiatives aimed at bringing GameStop into the future of the retail gaming industry. Soon after launching their own NFT marketplace, they also released their own cryptocurrency and NFT wallet. The plan was for GameStop to become the go-to place for exchanging and using NFTs in video games. For a business that started as a brick-and-mortar gaming market, the idea of a blockchain market is the way forward. GameStop has provided relatively little information on the outcomes of its transition into e-commerce and NFTs. Despite this, there are a number of factors that suggest its prospects of being successful are low. NFTs and crypto in general have diminished to the point where they resemble remnants of what they once were, and NFTs now seem to have been a thing of the past. A couple of months after GameStop announced its collaboration with FTX, the issue involving Sam Bankman-Fried occurred. If GameStop hadn't been able to decrease costs and produce a profit, the following few months wouldn't have looked very well for the company's plans. If GameStop's recent return to profitability was primarily the result of store closings and layoffs, and their expansion ambitions don't appear to be working out, the issue now is this upward trend sustainable? The truth is that it depends on the circumstances, which are quite complicated. On the plus side, their balance sheet has now significantly improved, and they don't have to pay interest until they borrow additional money. In addition to boosting future profits, cutting costs by laying off employees and shutting down hundreds of outlets will have a lasting effect. It's important to note that even a successful quarter is no guarantee of future success. Due to the holiday gift-giving season, the fourth quarter often sees GameStop's largest revenue and operating profit. Hence, they will need to find even more methods to cut costs if they want to maintain this quarter's profitability throughout the rest of 2023. The good news is that a sizable portion of their cost-cutting efforts is accounted for as the cost of sales. According to GameStop, a significant amount of these costs are related to the freight and credit card processing fees for their online store, which may be getting more efficient as they expand their online presence. This should result in lower costs of sales, which would hopefully slightly offset their decreased revenue in the first, second, and third quarters. The success or failure of GameStop's transition to e-commerce will determine its ability to expand beyond the next few quarters. With the addition of a new fulfillment facility in Reno, Nevada, they have already invested in its e-commerce infrastructure. Additionally, GameStop's presence in collectibles like Funko have been promoted by the new management. They face intense rivalry from companies like Amazon and Walmart, and most consumers now get their hands on new video games by downloading them digitally for platforms like PlayStation and Xbox. However, Ryan Cohen's leadership team comprises former Amazon executives and members of his own e-commerce startup, Chewy, which has achieved tremendous success. Following the 2021 short squeeze in GameStop shares, several analysts have been quick to point out the retailer's shaky finances. Moreover, GameStop is significantly overvalued based on standard valuation criteria and its existing fundamentals. It presently has a market valuation of around $7 billion. In contrast, the $6 billion in revenues from the previous 12 months only resulted in a $50 million profit in the fourth quarter. Even if they succeed in turning a $50 million profit in each of the upcoming 3 quarters, which will be extremely challenging, it would suggest a price-to-earnings ratio of 35. In other words, the firm is overvalued even in the best-case scenario. GameStop must successfully complete its change in order for its current stock price to be justified. It's arguably fair to argue that GameStop has, to some extent, proven its critics wrong. Many individuals believed that the business was a zombie headed toward oblivion. However, the meme stock mania became a self-fulfilling prophecy that enabled it to pay off its debt, usher in new leadership, and prove that it was still profitable. It still has a long way to go before reaching the height of its success, which occurred in the early 2010s when it produced hundreds of millions of dollars in annual profits. Additionally, this is a far cry from the thousands of GameStop shareholders who hoped the company would adapt to the digital era. But this is also true of the numerous publicly traded businesses currently attempting to profit, none of which have as many critics as GameStop. Whatever GME's stock price may be, there is no denying that GameStop is a real company with the potential for success. Hi, it looks like you've reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you around.